Welcome back, everybody. My name is Fausto Puglisi, and you are listening to the Cyber Expo, the next podcast. I am super excited of the speaker I have right now, a very long-time friend of mine. Probably known him for over, I don't know, maybe 20 years, maybe longer than that. Jeff Hirsch, how you doing? You look great. How's it?
Good, man. I'm good. How are you doing? You looking good too, bud?
I'm trying. We're trying. We all gotta. When you break that 50, you know what I mean? Like everything falls apart. So you got to kind of take care of your body and your health. I know we just met up at the Money Show. You lost almost 400 pounds, I'm saying.
Over 60.
60 pounds.
I ain't counting.
Yeah. Well, listen,
you can see the difference in your intro. Right? You can see you got a little pudge of your face there in the intro clip, the pictures in the intro you just played.
Yeah. Well, listen, next is going to be what, a facelift? Is that what you have to do?
Nah. Just eat right like we're doing and keep moving the body and just stay healthy.
That's it. So how's everything going with you? How you been working? We've been working on anything new?
We're bringing back the new commodity trade. Excuse me, the old Commodity Traders Almanac. We're going to put one out. It's been 13 years since we put that out there, so we got that going. What really been learning a lot from our monthly webinar with subscribers, with members. We did it yesterday, and we just ran for like an hour, just taking questions, talking to people, hearing what they're thinking, what they want to know about. That's kind of been a real source for information, knowledge. Just get a feel for what's going on in the marketplace, what people are thinking. It's kind of a sentiment indicator also. So that and just spreading the word. Santa Claus rally time coming up. So we've been talking about all the indicators and the seasonal trades, and so it's busy.
Yeah, so for some people who don't know, Jeff Hirsch, he's been around. I mean, the book's been around since what, the 1960s, 70s or something like that? How old?
68 was the first edition. It's as old as me. You said, I'm going to be
60. Your dad owned it, right?
What's that?
Your dad owned it.
He started it. It was his brainchild. Right. He created it. It was his whole epiphany to take all of the market's patterns, cycles, trends, indicators, and put it all in a calendar format so he could follow the market schedule along with your own. I mean, I had that mouse pad from you from years ago, but it's got the times of day to trade. That was one of the first. Yeah, it's not right here because but I have it at the other office. But I love that because it lines up with the half hourly trading patterns that I did by hand back in the old days when I was a kid. With an adding machine and underlining the Barron's half hour ticks. And it's a feature of the Almanac for years.
Yeah,
the beginning.
And yeah, I know. And it's I invented that mouse pad when I was a day trader, when I was a prop trader 35 years ago. They actually made a clock out of it, and they gave you a piece of paper. No, actually, just gave you a piece of paper and wrote it down. I'm like, you know what? I made a clock out of it, and then all of a sudden, I'm like, you know what? How can you get this on everyone's desk? Because everybody should have it. I made the mouse pad and I gave it to you, so it's great. It definitely saves you thousands. But the Almanac saves you hundreds of thousands. I mean, that thing has just been, the longest running book that I know in the market industry. I mean, it's just every year you come out with a new one. You do a beautiful job. It's a gorgeous book. I mean, when did you take it over from your dad?
Around 2000, 2001. It was a bit of a transition. Kind of around the time I was getting married, and we sort of did the whole, gifting.
Gift?
What's that?
Was it a wedding gift?
No, it was just sort of it's a succession plan. It was well planned out with our accountant, and I had been there I started with him in 1989, 1990, and I just was, it was time, and he was, he was not a, yeah, I mean, it's a long time. So, we started just learning things from him. I mean, I was doing it in my pajamas when I was a kid. You go into his office and he'd show me charts and you started looking at that stuff. I mean, I used to ship the books out of the mailroom. That was like my like Monday Night Football was my book packing night. I would go down there and shipping books to Zurich and Hong Kong and Indiana and Los Angeles, all over the place.
It's just staple. It really is a beautiful staple of just having it on, having the library of it every year and so on. But explain to everybody what actually is the Almanac for people that don't know what it is.
Well, it's the Stock Traders Almanac, and it's basically a compendium of all the market's repeating patterns from intraday patterns like we were talking about with your clock mouse pad, up to multi-year trends, the decennial cycle, the 4-year presidential cycle. So basically, what we used to say is that my father, maybe even myself, could basically tell you what the market was likely to do on any given, half hour, on any given day, month of the year. It shows you the personality of different months, and it's built on the roots of behavioral finance, like what people do repeatedly with their money. A lot of the market cycles and patterns are driven by institutions. That's where the big money moves. I mean, you track that stuff. I mean, you read that stuff.
Order flow.
And on the longer cycle, the longer pattern, the swing type time frames, it's sort of quarterly behavior driven. You see different patterns around triple witching, around the beginnings and ends of months, the middles of months. I mean, one of the things that we discovered back in the 90s when I started working for him was that it used to be the last trading day of the month, and the first 4 days was the monthly 5-day bulls, where most of the market's gains were made, and the rest of the month the market didn't do much. And then we saw this mid-month spike coming in there, which we're like, what's going on there? That's the payroll deductions, the bi-monthly or every 2-week payroll deductions going into the 401ks and IRAs, and the fund managers have to put that money to work. So that was, the kind of discovery. So some of these things shift, but it's showing you human behavior when what they do with their money. People pay their bills the same time of month. They go on vacation the same time of year, all that kind of stuff.
Now, what now? You have the new one coming out, right? When did it come
out, man?
The 26th, right? So we'll tell everyone how you can get it and everything and so on for the new one. I know you have a lot of people renew it every year.
Yeah, if you want to get it, from us, you best thing to do is subscribe to the newsletter at stocktradersalmanac.com. You can, click on get the almanac for free.
We'll post that link up in the next minute. We'll have Rich post that up for everybody.
Stocktradersalmanac.com. You can get it wherever you get your books, Amazon, and people are asking for digital copies, but this is really something tactile. You want to be able to take notes, write some things down, and have something.
You have one in front of you? Look how beautiful that thing is. That thing is gorgeous. It looks like almost like, a workbook almost,
It is. It's spiral bound. You can make notes on the diary pages. There's the probability number for what the market's likely done on that any given trading day. There's reminders in there about, late October is the best time to buy stocks, especially tech and small caps. There's the Thanksgiving trading, features. We got, you want to buy in a weakness to set up nice this year. Buying in a weakness ahead of the week before Thanksgiving and selling at a strength for that trade. There's the small cap feast from Tuesday before Thanksgiving.
Yeah, break that down for us, because that's what people like us to understand what the almanac means. I mean, it's not like there's also like the weather's almanac or something like that. It's very similar.
It's a combination of seasonal trading patterns and strategies where places and times counter edge for your money, for your trades, and also indicators like the Santa Claus rally is often misunderstood. This is something Yale invented in 1972 in this 1973 Stock Traders Almanac, along with the January barometer. So the Santa Claus rally is not some year-end rally, anything from Halloween to the end of the year. It is the last 5 trading days of the year and the first 2 of the new year. And it's an indicator. It's not really a trade. S&P is up 1.3, 1.5% over this 7-day, trading day session, when most of us are out doing other things with family, holiday travel, and the people at the desks, the pros are picking up bargain stocks that are sold for tax loss selling. And it's a general, upward bias to the market. And if it doesn't happen, there's also, year-end window dressing, people putting holiday bonuses to work. And it's this general, bullish vibration during that period of time. And when that doesn't happen, it shows that there's some other, forces at play there. And Yale's famous line, if Santa Claus should fail to call, bears may come to Broaden Wall, means that if we don't get a Santa Claus rally over that 7-day stretch, it's time to start looking at some of the other indicators. And this January barometer, the full month S&P 500 for the month of January, out, as January goes, so goes the year. And then there's this first 5 days indicator, first 5 trading days of the year. We stand on the old guy's shoulders and built something called the January indicator trifecta. This is on page 20 of the 26 Almanac. When we hit the trifecta, we get a positive Santa Claus rally to 7 trading days, positive first 5 days, positive full month, January for the S&P. 29 out of 32 years, the S&P is up. So it's 90.6% of the time for an average gain of 17.7%. So pretty solid stats. You know,
what does it see for this year?
What's that?
What does it see for this year?
What it saw for this year was we had 2 out of 3, which is pretty solid. Santa Claus was down, if you remember correctly, and then the first 5 were up, and the full month was up. So bullish bias. Here we are up 15% of the S&P as we head into the Thanksgiving holiday, right? As of yesterday. Yeah. Pretty solid, right in our, and you know, we put out an annual forecast. There's already one in the 26 Almanac, but we put one out just before Christmas every year. And our best case scenario was 12 to 20%. And it was kind of, you know, a little less than 50 initially, but as the market came back from the tariff tumble and started breaking through those you know, resistance levels, we shifted to, you know, full blown bull. I still think we got 20% gain potentially for this year. I think we can, you know,
you really think we can go another 20%? You go come
not
back?
Another 20, but a total, another year of 20 for an annual gain. I'm looking for 7,100. You know, the mid-November sort of weakness was exacerbated by this, you know, Bitcoin deleveraging event, and Powell, you know, October 29th, Powell said, "Oh, no more cuts." And now he's been market sort of slapped him around a little bit on that.
Yeah, it is.
But that got, you know, the little weakness in mid-November was exacerbated. So I think the rebound here, which we're seeing the last couple of days, you know, can be you know, a little bit stronger, and we could get, you know, what we got 5% gain over the next 5-6 weeks is, you know, not crazy.
Yeah, we took a little bit of a smacking in the face. I mean, the thing, it was almost up close to, was it 69? We dropped down to 65 on the S&P. The Dow also same thing. I mean, that took a big hit at the high. Do you follow the Dow at all, or you just being the S&P?
No, Dow quite a bit. That's what a lot of the stuff is built on in the Almanac initially. It's still important, you know, and people poo-poo it, but it's still, you know, the non-fly-by-night stuff is still the solid, you know, the old school economy is still there. We were down, about 5% Dow and S&P from October, and then about 8.5 on NAS, right?
Yep.
So, I mean, considering how far we came all year, not a
crazy
pullback.
Not that crazy. I mean, there was some great opportunities. Liberation Day, what you're talking about, Tariff Day, I call Liberation Day, when it's back in April. That was, I mean, the Dow was down all the way to, 3,800. We're at, 10,000. We bounced 10,000 points just on the Dow there alone. Now, does your Almanac focus specifically on just the market in general, or focus on specific industries or stocks?
The Almanac is not specific stocks. We do that in the newsletter. We roll all that information into the Almanac Investor newsletter. But there is a feature on sector seasonality in the Almanac. There's talking about, I mean, and October is the big buying spree where a lot of these sectors come into play.
I love October.
Copper, you know, we roll into some of the stuff from the Commodity Traders Almanac. We got a copper trade out there right now. I own the miners, you know, the miners ETF.
They're doing well.
Yeah. Good opportunity there. A little concerned about energy. So we kind of correlate some of the commodity-based seasonal patterns. Of course, you know, our methodology is sort of a 5-discipline approach. We look at seasonals and cycles, fundamentals, technicals, and monetary policy and sentiment. So when we go for stocks, we do a fundamental screen. We technically, you know, look at them on the charts and see what their some of their indicators are, but we do it at the opportune time of the year. So seasonal overlay on that. So
explain to the listeners, I mean, even myself, like, how does the Almanac actually, I think I said it, but I'll say it again, but how does it actually work? Like when you write that Almanac, how do you project what's going to happen over the course of the year? I mean, is it working that if something happens with this, it's going to change here? I see it's more of like a workbook, wherever it is, but like, and how do you prepare, and how long does it take you to write an almanac for the new year?
A lot less than it used to.
Yeah.
We run a lot of things through some software, that we built. The stuff I used to do by hand with a pencil and graph paper and adding machine, we've got some queries stuff that we can put in there. But you look at the history and the 4-year cycle and the seasonal patterns. I didn't talk about the best and worst months, but you look at that with respect to where you're at a time. And I write my outlook in the almanac around middle of the year, around Memorial Day, June, give or take a few days, depending upon when we get the thing off to the press. But it's uncanny how it still has validity and accuracy, because we're basing it on the history of human financial behavior. And we have a pretty good read on where we are at the moment. And then of course we let ourselves update it at the year end in our newsletter service. It's just amazing how this 4-year cycle continues to give us insight and foresight into what the market's likely to do. It's not perfect, but we've been pretty accurate with these things over the years. And granted, I've been doing it for 35 years plus.
No, I mean, listen, it's one of the most well-known books on some of the, some of the most famous traders or billionaires own it, just to have it. When does the almanac has to change course? Like, does politics cause something into it? Does military war into it? I mean, you can get hit with like COVID. You know what I mean? Like, it just throw a wrench into things.
I mean, nothing's perfect. Nothing works exactly 100% of the time. Things like COVID are going to throw people off. Are going to throw the market off. The Liberation Day stuff. Yeah. Even though Liberation Day, look when it happened. It was early April. The first quarter of post-election years is a weak spot. We had weakness in the first quarter. It just sort of bottomed a few days into Q2. So, these administrations have patterns of why they do things. I mean, wars, recessions, bear markets tend to occur in the first 2 years of a president's term because they want to get their least savory policy initiatives through. President Trump has been doing that on a even greater scale because he's pushed through a lot. It's very typical post-election behavior. We got a lot of that negativity right out of the blocks, and we had the big rally from there. But, you're going to have exogenous events and black swan things that, are going to be outside of any pattern you look at, whether it's technical, fundamental, seasonal, cyclical. And, that's why you have selling strategies or exit strategies and stops and that kind of thing. But amazingly, Russia invaded Ukraine in a midterm election year.
Yep.
We had a very textbook October midterm year low. I'm looking for some similar action next year.
What are the best months as almanac? I mean, like, historical patterns from the almanac has still surprised people today, even me.
6 months. Not selling mango. The best 6 months of the year, November through April. Not selling mango away. You got to buy in October and get your portfolio sober, is what I like to say. October is the bargain month, the bear killer, the best time to buy stocks. It was featured in the 1969 almanac, where Yale was talking about. It's amazing how that continues to happen. So the best 6 months, there's a guy, David Aronson, did a book called Evidence-Based Technical Analysis back in 2008. He's at a Baruch College in the city, CMT related guy. And he put 6,200 different black box systems through the scientific method, trying to disprove the null hypothesis that all of their results were just the result of chance, did not have predictive power. They all failed. We asked them to do the same thing with the best 6 months, the simple best 6 months switching strategy, buying on October 31st or the last trading day of October, selling on April 30th versus buying April 30th, selling October 31st. Found that unlike any of the other 6,200 different black box systems, it did have predictive power.
Wow.
This was something Yale discovered in 86. He started after the discovery, so it was not backward looking, it was forward. And we throw a MACD indicator wrinkle on that, and we improve the results there. You have like a loss during the worst months, a massive gain. You compound $10,000 since 1950 in the Dow and that, and you're up to 3.5 million in the best 6 months, November to April, and you lose $5,000 in the worst 6 months. So these are the things that as we were saying before, it doesn't work perfectly. You use seasonality as a guide.
It is. Listen, wrenches come in all the time. Someone just throws something in there. Anything could happen. I mean, even a tweet that Trump does. I mean, all of a sudden he could just say something.
Yeah, and you got to follow Truth Social these days to keep track of this stuff.
You do, and you know what? Listen, I love him, hate him. I tell people, listen, he's probably been the greatest thing for the market because when he says something, he actually does something, and it moves the market. Like, it has nothing to do about liking or hating him. I tell everybody, but like, if he says something like, I'm going to tariff this guy, he actually does tariff it. Not like, he's
very true.
Smoke, and the market reacts to it. And it's a short, and then he'll say like, hey, I'm getting into nuclear power. And, and you have these guys signing there, and boom, the nuclear stocks take off. So it's I've been doing this for 35 years, and I've never seen, the volatility we had in the market like we had, what's going on.
Got people nervous.
Yeah, it does. But as traders, you know what I mean? Like, listen, unfortunately, these catastrophes make opportunities for us, So, I mean, you just can't sit there and like, I love a company, I'm going to stick with it. There's going to be other opportunities out there. I'll give you an example. Like, we've been big fans of Chipotle. I mean, like, why would you trade Chipotle? I mean, like, the stock got destroyed, and I moved my money out of what?
Wendy's also, along with Chipotle, both of those guys.
I mean, like, I'm not trying to market or promote a stock. I'm just trying to tell you that, like, there's opportunities everywhere out there. And if you hear something that you probably never think of, if it's quantum stocks, if it's, it's not always the fabulous seven, like, people think of NVIDIA all the time. Meanwhile, the videos get crushed lately. There's always opportunities out there.
There may be a rotation out of NVIDIA being the big leading AI tech boom stock.
Yeah, like the tech stock. I mean, like, all the AI stuff. So what's your thoughts on that? What's the Almanac telling us on that?
Well, I did this super boom book based upon one of Yale's long-term cycle discoveries. Back in 1976, he found that the market makes these 500% moves called the super boom after war and inflation. And he predicted from about 670 on the Dow to 3420 by 1990. We noticed this happening again around 2010. So with the Dow at 10,000, I projected Dow 38,820 by 2025. We got there early. We've upped that. So this is the inflation came a little later. This was us getting out of the whole Iraq, Afghanistan, involvement. Yes, there's war going on in the world, but the war that we're talking about, like World War I, World War II, Vietnam, and what happened over in the Gulf was American boots on the ground, like real deployments. So that ends, and then inflation kicks in, and then back in the previous three wars, we had a lot of military spending. What happened after COVID was akin to the level of military spending that we happened. So that's where we got our inflation level. And then the other factor of the super boom is what I call a culturally enabling paradigm shifting technology, disrupting technology. Yale highlighted the microprocessor back in the 70s. You asked about AI. I think this AI is the sort of center, the stack of the tech boom. I'm calling it the AI super boom. And we've picked the low for the secular bull market. The end of it was 1982 is what everyone pretty much agrees on. We're looking at 2011 being that point, and projecting our 500% move from there puts us up to Dow 62,430 by, average gain over the last bunch of decades is about 8.5%. We can get there within 5 years. So I think we're in the middle or early innings of the AI boom. We probably get a bit of a correction next year, maybe a bit of a bear market.
When do you think that would hit? Like what time? Like when's a month that the Almanac is really basically telling us? Because I want to go to the Almanac. I want to bring up. I want you to show everybody a little bit more about it because we still have people here that are new to it and want to make sure if they're new to trading, how they could use the Almanac, effectively, in their trading and understand, like we just mentioned, the seasonality of it on it.
So the midterm year is the weak spot of the Yale called it the bottom picker's paradise. So Q2, Q3 is the weak spot of the 4-year cycle, the midterm year. That's when I see the market getting into red numbers, potentially, bear market territory. But this sets up the best buying opportunity of the 4-year cycle, the sweet spot. Q4 of the midterm year through Q2 of the pre-election year, which would be 26, 27. Dow gains 19% over the 3 quarters, S&P 20.3, NASDAQ 29.4%. This is the setup. So if we're looking at a corrective phase, a bear phase next year, look for a low in the August to October period, and then you back up the truck like we did in 2022. And then there's this potential for a 50% move in the Dow from the midterm low to the pre-election year high. That would be 2027 high. A lot of those highs occur in December. It's actually about 46.3%. NASDAQ, going back to 74, midterm low to pre-election year high, 66.6%.
Wow.
So, I mean, this is the setup for the midterm year. It's all in the 26 Almanac. There's seasonal pattern charts. It's just, here, I can flash you one. Oh, yeah.
Actually, why don't you show us really quick right here on.
Let me go through a few of these. I mean, I got a bunch of things here just about where we've been. Here's the old guy. My saying, they say that those who fail to remember the past are condemned to repeat it. I like to think that those who study market history are bound to profit from it. Just a couple of seasonality. When seasonality doesn't work, it becomes an indicator. This is I told you about our 5 disciplines. There's a little code. If anybody wants to use it, you can copy and put that code out there. But I want to get to the chart that we're talking about.
We got the link up there so everybody can click on that link.
Yeah. So this is the seasonal pattern for this year. This is the post-election year pattern. Our aggregate cycle in this pink line is the all years since 1949, all post-election years, and then all years ending in 5. And the 5th year of the decade is pretty strong. You can see this is updated through the last close. So, it looks like the rallies are, we're still like right up in this, upper echelon of the bullish patterns here. Again, the post-election year has been the best year of the 4-year cycle since 1985. Whoops, I'm going the wrong way. There we go. Just a couple. There's the October. There's the 69 Almanac I mentioned. This is the best 6 month seasonal pattern. Wow. I know we just got a bunch of stuff here, but I want to get to this. Tuesday before Thanksgiving, big year-to-date gains, pretty solid for the rest of the year. This we just put out in the blog post at Almanac Trader on Twitter and or X and such. Small cap effect. The January effect starts in mid-December, not to be confused with the January barometer. Popping right here. Small caps beginning to stir. There's the 73 Almanac, Santa Claus rally stuff I mentioned. Here's the 4-year cycle stuff. So midterm year, kind of weak. Dow, S&P, NASDAQ's negative. The sweet spot, as I mentioned, right here is Q4. Here's that weak spot I'm talking about. Dow down. NASDAQ down 6.6% during the Q2, Q3. The trouble spot that were queued up. This is on page 46 of the Almanac. The bar chart version, just so you can see. Here's that Q1 post-election year that I spoke about over here on the left side. The tariff Liberation Day tumble we had there. And then I want to show you, here's the midterm low, the pre-election year high stuff. You can see a lot of these gains are made, a lot of the highs, are made on the last trading day of the year, big cluster end of December, for 2027. And then here's the midterm election year pattern. This was the thing I really wanted to get to show you. Of course, I had it at the end here. But, this is my outlook is looking for some bear market action, crisis. I think some of the impacts of the tariff stuff can happen here. Again, we're going to reevaluate the stuff as we get through December when we put out our annual forecast in the newsletter. But this week patch here, looks like we can get into red numbers before we end up, 4 to 8% is what, it's written on page 10, 11 of the 26 Almanac that I put out in, that I wrote in right around Memorial Day. So here, in this aggregate cycle is midterm years, all years, and the 6th year of the decade. Combination of all midterm years, Republican midterm years, the 6th year of the presidency, second Republican midterm years, just kind of a few different outlooks. But, this is where we sort of get into this 4 to 8% for next year. A bit of a pause after what is lining up to be 20% annual gains for the S&P. So that's kind of, a little sneak peek at what we're looking at for 26 in the 26 Almanac.
All right, cool. And by the way, if anybody wants to get the Almanac or anything else, a couple of things. Here's a QR code really quick for everybody. Oops, let me bring it there. There we go. Yeah, it's up there right there. Or you can take your phone, just scan that QR code, and we can get you registered, and you can get the Almanac. And also, Jeff's going to do a workshop with us coming up for the next Cyber Expo. So it's always nice to kind of get the Almanac now, play around with it, use it, and then and get ready for the upcoming event that we're going to do with him. All right, so we'll get that up and running, and I'll leave it up in the top left-hand corner. And we got it over there on the chat, for you guys. Just click on that link right there. You can always register. Now, anything that we should be looking forward to, that we should be concerned about going into 2026?
I think the midterm pattern itself is the concern. We want to see what the January indicator trifecta has, tells us. People were asking me on my, members call yesterday, because do you think the midterm year is going to be weak? Does that mean the trifecta is going to be weak and we should get out now? I said, no, let's let the trifecta give us its reading. So we'll see if Santa Claus rally shows up. If the first 5 days, are positive, if the full month January is positive. That's what we're going to be looking at. And I think the Fed, all eyes on the Fed right now.
It's got a lot of pressure, the Fed. That really pushed him. What's your thought on it? Do they hate them for it? Or, is he holding back on purpose? What's this whole story with the Fed? Why is he not lowering interest rates?
I think their models are dated. I saw David Malpass on Bloomberg a couple of days ago. He had an op-ed or an editorial in the Wall Street Journal. They are not, they're a little bit dated. One of the things that's kept the Almanac, relevant over the years is we sort of change with the times. I think the Fed's looking at old models and they're not really getting ahead of things. And also, they've been too prominent. When did it become that the Fed has to be out there making speeches and telling you what we're going to do, we're not going to do, and the whole Greenspan briefcase stuff? Back in the old days, the Fed was created as a guardrail. You listen to the bond market and you come in there and make some adjustments when things get out of whack. You don't lead and direct policy. So I think they've got a little bit want
to be like Showtime.
Yeah, a little bit trying to drive interest rate policy and monetary policy as opposed to guiding it. We all know the bond market's the smartest economist out there, next, along with maybe Dr. Copper, but bond market's smarter for sure. So they should be listening to it and tracking it. And if you look at what's happened with the 10-year recently, the bond market's saying, hey, cut the rates, and you can see the CME, Fed watch. They didn't really promise that they were going to cut, but they sure were leading everyone to believe that. And then they said no. And then there's the debt. The country's debt service is tremendous.
I know. How's the Almanac look for the future regarding about the national debt? Is that affecting the Almanac at all? The Almanac predict that was going to happen?
No.
Listen, I always tell everybody this. I know a lot of politicians. I donate. I see them. I play both sides. Whatever.
Yep.
Especially in my industry. You know how it is. You can't be political in this industry.
No.
But, you'll
Very
get.
important point. I
Yeah.
was going to say that before when we were talking about it, but yeah.
Yeah. Keep your private beliefs to yourself, but but you got to play both sides. And let me tell you, nobody wants to eat that pill. Nobody. That is just like I was just talking to somebody here in Nassau County, where I live. I was talking to the town executive, not the town executive, talking to the person that I write the check to for my school taxes. And I'm like, what the hell is going on? Like, why can't you guys figure out your school taxes is always going? They like, you know what? They figured out, but they don't want to bite the pill, because they do that. It's a catastrophe for the whole for them, their career, and everyone underneath them.
I was an elected official for a little bit. I ran for office. I was a trustee in my village.
Oh, yeah, I'm actually I'm on the board of the architect review board, so technically
I was zoning board for a little while before that too. So
yeah, that's how you usually start. You start from the zoning board, and they want to be, hey, you're doing a good job, become a trustee.
Yeah, it was definitely you get a lot of complaints as an elected official.
A lot, people like you, and all of a sudden they hate your guts. All of a sudden, like you'd be like the most loved person, and all of a sudden, like you totally like go against you. But yeah, that's going to be one of the issues. All right, so listen, before we go, Jeff, any last minute advice you can give traders? And let me post up that link, everybody. Once again, you got that QR code, you got the link up there to get his book, and we got this free event that we're going to be doing with Jeff Hirsch. So definitely take the opportunity to do it right now. But any last minute advice you can give traders that they have to look for going into this new year? I know we're going into the midterms, and the Almanac obviously has been a staple for everybody. But anything, and I know you're always out there doing these events to kind of these workshops. I follow along with it. But what do you recommend? Anything you can tell them to look out for?
From the concerns that we talked about with the midterm year and the keep an eye on the indicators. I go back to some of the older stuff. In the back of the book, there's a couple of pages about from Gerald Loeb about how to keep track of why you're investing things, and also keep track of your investment mistakes. If you don't profit from your mistakes, somebody else will. There's check your emotions at the door. You got to let your winners ride, sell your losers, and be prepared. I mean, you do your homework before, while the market's closed, while you're not trading, and you get your entry levels, your stop losses, your buy limits, where you want to go, get in and out of things, and you stick to it. So it's really emotions, checking them at the door, and going against your human inclinations to not admit error and sell your losers, and let your winners ride.
That's the hardest thing people do. It's one of the biggest things we teach. Nobody likes to take losses. The winners, they take care of themselves. The losers, nobody wants to take. No one wants to admit that they're wrong. So yeah. But any new doing new events in person coming up anytime soon?
We got a few things. Yeah, I mean, I'm doing a CMT party in New York City for any of the technical people. We're just having a gather. We're going to talk about a little Santa Claus rally stuff. I just had a little hip replacement done, so I'm not traveling as much.
When did you have it done? Did you have it before I saw you in Orlando? After?
Just after.
Oh, you just had it done?
Yeah. So like 3.5 weeks ago.
Let me tell you something. And we have a lot of older people of hip replacement. I heard once you have that thing done, you're like a totally different person. My mother-in-law had it done. The only thing that's the worst is the knees. Yeah. But hip.
But it's I'm rehabbing now. So
did you watch the video on that? Doing that? How they do a hip replacement?
I don't know if I'm ready to see that yet. Yeah, it's like frame carpentry. It's brutal.
I'm gonna tell you a funny story. So I tore my ACL and my meniscus, and being stupid, I fell on playing beach volleyball, and I came down and snapped it. Make a long story short, so I didn't know what was really wrong, and then I went to the orthopedic, and he's like, you're 50 years old, you really don't have to do it, but I recommend you to do it. But I was going to recommend one thing. Whatever you do, just don't watch the video on YouTube how we do it. I'm like, why would you tell me that? You know what I mean? So I'm in bed with my wife and I watch this damn video. I'm like, what? The guy's got a hammer. He's like, are you crazy?
We were watching the new Frankenstein movie a little bit with the Guillermo del Toro thing, and I'm sitting there with my leg up, and I'm like, Jen, I can't watch this right now. It's like he's cutting this guy up. I'm like, no. And I have a strong stomach, so yeah.
That was terrible. It was terrible. Well, listen, Jeff, thanks for coming. And listen, happy Thanksgiving to you and your family. And by the way, everyone, we will be making some quick shorts out of this. Please like us and friend us, and make sure you share it to everybody. And please take advantage of the Almanac, because it is one of the biggest staples and one of the most famous books in the industry. So you always want to have it every year. And plus, it does those events. So, Jeff, thanks again, and happy holidays to you and your family too. Okay.
Thank you, man. Appreciate you.
Thanks, everybody. And we'll see you next week for another upcoming Cyber Expo.